General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Japanese super fight. That looks interesting. We got some real boxing that's coming back. I need to do my Power of 3 for Saturday. Saturday's day will be the 27th. Which models were hit and which models missed for the week. So, 15-minute chart. Here, this is a beautiful read. Tuesday low of the week, short term. Rebalance here for a continuation. This is definitely an order block model. It's like that thing that's in my way. Candle body. Alright, cool. I'm gonna use green for this order block. Model, OTE, and Tuesday low week profile. Discipline, patience, confidence. This week was about learning to stay out of thin, low volume conditions. Case study. Each day was kind of weird. This could be studied as then holiday week. We see price hitting objectives. But mostly it's time distortion. Experience learned this week. Hmm, this price is always like teaching you. Just respect the monthly cycle. Week 4 and week 1. You don't expect that much since it sets up week 2 and 3. Next week, improvement focus. Take our time and find higher quality setups. Alright, pull up 3 charts. Hold on. Okay. Take our time, high quality setup. This is the power of 3 charts. It's really only one chart. I can actually fit it there. It's actually a lot cleaner. And you can see settlement price stayed above, never efficiently delivered it under settlement price. Yeah. Monday accumulation. Tuesday low of the week. Thursday capped range. And Friday was nothing day. This is clean. Boom, boom, boom. Pick 3 charts. Nah, no, so let's knock out the levels. And I did a previous week high indicator. I think I put that link in one of the descriptions of the videos I was talking about when I was going to make that. So now when I'm looking for my 2 higher levels on the way down, I already got the main ones that don't change the monthly levels. This candle seems interesting because we swept the low, but we didn't sweep the high. And this is all-time high. So we mark this. there anything else on the monthly range? This seems balanced. And we had a liquidity exchange here. So we shouldn't return back here unless we're going to go lower. This is the last time we took out a high. And this is the last time we took out a low. This candle body is going to be interesting. This is still interesting because there is no candle body here. So let's take this from here to here. This is like a tiny gap. Okay. This is balanced. This is balanced. This is going to be previous week's high, previous week's low. Well, this is actually going to change because it's automatic. 2 months finna change to Thursday. We don't need this high, but closing above this high is super bullish. We already wicked this. I would consider this a mile marker. Okay. This is why I need the 9 weeks of days. Okay, here's the 9. This inefficiency looks like, okay, we ain't finna come back here. I don't really see us leaving this range either. Like, to end the year, we could end at EQ. Because overall for the year, we're still up from the year. Let's go to the month. January opened here. It says 2025. So Trump 2.0 gave us like a classic buy day, but we don't got no wick. Very, very, very bullish market. Crazy here too. Let's go one more. Yeah, so started here, us closing up here is still a nice increase for the year. Ending the raise here. I will watch this since we kind of reacted on it already. Let's see. Make it white. This one would be interesting too, but it's not as interesting. This is the new week opening gap. This is going to be very interesting. We might come back here. This is Thursday, Friday. New log. Let's check out the 4-hour time frame. Now let's kill this border. Anything interesting that's not already marked? We got the bags coming in clean. All the bags held. Anything up here interesting? Equal highs. We got the mile market here for this liquidity pool. Couple gaps in here. Order block by previous month's high. This looks thin up here too. I don't see nothing too interesting. Maybe this fresh bag here. Just because we never tapped it. H1. Yeah, we really don't see anything on H1. Alright, so we're good for this. Let me take a look at that too, because I do want to see how this played out. Let me move this previous day settlement to take it off the 4-hour chart. Okay, that's cleaner. This is the month of December here. Week 1, week 2, week 3, week 4. Very small range month. So December monthly review. Framework hits. Framework say about a month. This body. This month was super slow as far as delivery, but for the most part, week 3 had no misses, and the rest of the weeks were super tough. Hits played as forecasted. Week 3 was the best. Misses, narrative off, or timing off. Week 4 was the off week. Low volume. And choppy holiday conditions. Hits and frameworks. Week just do? Oh, I hit something. Boom. Where would it hit? Concentrated. Holy week. Where did the misses occur? Execution drift. Week 4. Adjustments to rules. Add, remove, or tighten. We tighten rules concerning state. So after a trade, we check mental state. For clarity, awareness, before we make a decision. Win case representative, not the biggest. Price redelivers to previous day's range. For OTE or fair value setup. Trade confirm. Really 8 to 12. Reversals. Management. Posting liquidity. Repeatable edge. One sentence. Between 8 to 12. Wait for RAID and CSD. Lost place. Clears learning. Lost. Narrative framework. For a losing day. Narrative. Is read right. But the framework is showing signs of a delayed delivery or messy delivery. And engaging. Price is quickly stopped out. And then usually if it's a loss, really it's 50-50. Sometimes it's gonna go, and then sometimes it's gonna look like it's gonna go. I think for the loss case, the biggest takeaway would be you would get quickly stopped out, and price will not show a true displacement in your direction. So where will it break for the lose case? It'll be the behavior of price. What's the corrective rule to prevent reoccurrence? Mm, invalidation levels and remember speed every time you write. It does not take long. Those $1,000 days are like 20 minutes of trading. Mm, the best days, trading days are 20 minutes long. That means it just does what you needed to do. KPI checkpoint, trades and engagement days. Mm, took a lot of trades. December average win rate. Probably like around 30%. Average R 1.8. Total R. What am I? Boom, boom, boom. I say it's like 3R for the month. Expect to see R trade. No. Week, let's say week 1, 2, and 3 was green. So it's only 1 week that wasn't green. Yes, yes. I expect to see R per trade is 2.5. It's 50 points. Risk versus plan. Weekly, monthly caps. I think I'll risk less than I planned. So I only risk like 4%. And I gave myself 6 to 8%. Mm, I didn't really leave anything on the table. And my stops have been tighter than what they're supposed to be. Did good trade management. Adherence to trades and playing kill zones. I'm doing that 100%. Taking at playing levels, definitely 100%. I ain't missing the trades. Execution issues worth fixing. Um, trying to trade idea after a loss. On KPI to amplify next month and how. We're gonna watch red to green days. What I did that matched my standards. Execute my time window. Where did I slip? Slipped. Slip with protecting of days. One behavior. One behavior to continue or stop. Hold on. One behavior to continue would be journaling and reviewing trades. One behavior to stop would be candle stop losses. Entry time and risk play. I think I'm doing good here. We're entering my setups without hesitation. One precision upgrade for next month. I'm gonna work on just journal the open more to really learn those open price signatures. If ready for the day, then I will risk only what I'm up by half to save rainy day. See if prices holding in the range and chopping before news. And I will say take the day off. Okay, so what's another good one? Let's say this is a pretty good one. If I notice myself thinking about the payout instead of the price action, then I will take a mindset break. Thinking, building, not taking. Here we go. All right, that was a good monthly review. Let's look at the quarter. What did the quarter deliver? Trend range. see. Let's go here. Let's make this yellow or something. All right, quarter open. Okay, and 1, 2, 3, 4. So here goes the month open. Week 1, week 2, 3, 4. This created a push up, this created a push down, and then it stayed in the middle. Range. Month 1 pushed up. Month 2 pushed down. And month 3 stayed in the middle. What did price reach? 25,257 on CFDs. 25. What season or policy auction events framed this quarter? This government shutdown. Updated bias goals. Updated bias going into the next quarter. Government back to be open. Gotta watch midterms. For political environment. I think we did to start here. And continue bullish. Framework precision audit. Did the quarter, month, and week cascade hold together? And if not, where did it break? So where's bullish going into the quarter? It's really month 2 with the government shutdown. Let's listen to news catalyst. Government shutdown. Weekly and daily profiles, I forecast what printing versus timing. That's a Monday. Lower weeks. And sometimes those Mondays did not take liquidity. So that was kind of throwing me off. For my long-term and short-term logical, my targets are great. Which repeated arrays worked and which didn't and why. Lots of the deliveries for turtle soups. For turtle soups. It just ran. That just melted. Even the bullish deliveries were like, we're at all-time high. VIX is at 100 and it's pushing and everything's going up. 3 fixes to the frameworks. Moves all add, remove, or tighten. Okay, so add that. Number 2, I would say switch from 20 points to 50 points targets based on the VIX and market environment. And number 3, yeah, I think that's it. It's the other stuff would be like mindset, risk management. Yeah, I think that's it. Not applicable. I did you guys. Yeah, I did that. It's gonna be RAID, CSD, and return to order live. 2 trades I shouldn't have taken. Precise rule they follow. Violated. Continuations that don't displace after they hit liquidity objective. Those continuations are looked. Reversals, king. Continuations, it's like, where are you gonna put this stop? Or trades really close to big volatility. Bravery trades. What will I repeat next quarter? Business hours, trade management, pre-market routine. That's really good. Writing out the daily intentions. Quarters pattern, trend acceleration. There was some manual intervention in here. More of a range. This quarter created a range and stayed inside it. When was the most of the money made in this quarter? I would say really November. Mid-quarter, which makes sense because it's the body of the candle. Process evolution, routines are ran consistent, skipping impacts I observe. Observe. Monday traded is not bad. We can price well. More focus should be on the losing days. For mindset refinements, good days is you don't need no help on good days. You want to get better, you got to focus on the bad days. The one habit that move the needle, trading you play, watching trade, more video, with audio, and playing it back, and running the trade metrics and audio to gain mindset gems for myself. One habit to retire. Will be mm, mm-mm. What is the habit? Because habit is a strong word. Nothing comes up at this moment. New standards for the next 13 weeks. Clean journal and day processes for the day, no matter the outcome. Identity, execution, and quality score. Human fit. Procedures run. I mean, still focused on the expansion. But bread and butter, New York session window approach. Yeah, that's right. 22 model. Next quarter, parent DOL seasonal lean. Let me see what the seasonal looks like. hmm Hey, we just had an election. Where did it go? It's in here like, oh, okay, there you go. Replace it with the NASDAQ. Here we go. It's better. Yeah, it's not no pre-election. All years. So what we got here. It's a flat January based on seasonality. Where would you expect the highs and the lows of the month to form in January based on the seasonality? The low of the month be week one. The high of the month will be in the middle of the week. Two to three. Presume Dixie bonds risk. Taking this risk off. Fed is back on quantitative easing. See if I can do that. NASDAQ. Three tops if this. If war, that's big. Peace, it's also big. Politics. Government shutdown. Scheduled for the January. And I wouldn't be surprised if they used the shutdown for politics. They be playing with people's paycheck for politics. It'd be crazy. They really had the government shut down for like food stamps and benefits for foreign people. It's not even American. It's crazy. And then it's just life, I guess. All right, so that's the end of the quarter review, month review, week review. Going into Q1. Okay, let me stop this. All right, let's get ready. Next quarter. Outcome from risk first execution. Risk first will dominate profit execution. My edge is no longer expressed through position size or monthly targets, but through capital preservation, intraday discipline, and controlled extraction. I trade high probability intraday expansions aligned with higher time frame context with strict respect for firm risk mechanics. Performance focus. I focus on 2 to 1, 3 to 1 risk to reward setups when structures allow. But I allow the market to pay me what it offers without forcing extensions. That's good. One shot, one kill is my A plus setup. Yeah, I like 2022 model. Maybe a reversal. Continuation. Equity growth plan. The outcome of a single trade does not matter. What matters most is our equity management aligned with our monthly projections. 30 pips, but you only achieve 25 pips. You're still on track with projections. Our results are exceptional because they are averaged out through an entire trading quarter. Let the market pay you how it will. You are simply trading in line with the North Star as a projection. The actual results will be average. Risk tier logic, no more than 8% of risk allocation of total capital per month. Risk profiles, one shot, one kill, 2%, one shot, one kill, conservative, 1. Day trade 1%, bread and butter, counter trend, 0.5 risk. If we exceed the risk allocation 2%, we automatically have to stop and withdraw from trading from the week. If we experience a loss, we deduct it from the weekly risk allocation. If we experience a loss, we mitigate it on the next trade with the remaining weekly risk allocation, or wait for the next weekly risk allowance if risk allocation is exceeded. The risk allocation 2% begins Sunday. Deadline by Friday. We're not trying to rush the risk on Sunday opening since we're limited with weekly risk. We're not trying to force risk on Friday close if we have weekly risk remaining. If I respect my risk allocation per week, there's a potential gain of 8 to 16% per month. And I spoke my risk because I judge my results on a quarterly basis. I would not judge my results on a weekly basis because I'm on track with my North Star projection as long as I manage my risks. KPI targets, looking for 8 to 10, 100% rules, or multiple average positive, no trailing drawdown events, no news violation, and no revenge trades. It's not the seasonality. I need a new one though. Monthly chart with the 3-year look back. And here we are. So we're going to 25. So I need 22. Shoot, we only get a 3-year look back. Let's see if we get some CFDs with some longer feeds. Capital.com be getting on my nerves though. Yeah, futures will be like changing every time. This feed does look better because the last feed just came from here. We got any other old feeds? Let's see, Rwanda. Forex.com. They regulate it. I wonder why nobody uses Forex.com. Look, they got data to 2008. They got data to 2003. Oh, under for the win. Let's take this off. We can still use that for something else, but ain't nothing in that. That's real. I found my forecasting layout. Yeah, I'm forecasting right here. SPY. Yeah, I trade SPY. Just the contract I'm trading. Alright, so now let's get a 3-year look back. 25, let's go to 22. Okay, you can see the date. Definitely some inefficiencies here. unusually large gaps in price, which maybe get handled, but think about all those bear markets. Here go 2008. You don't really see this thing dropping in the history of since it came out. Do I have something I can put here? So here's our inefficiencies here and from here. And put this text, make it yellow. We can be like, this is our last real base. And you note that we never really retested some of these order blocks. Even here, what was that this year? This might be the point of no return. Did this line hit this line? It did. Yep. So this is our liquidity exchange here. From a monthly perspective. So you could say monthly bullish breaker confirming bullish structure. Me, I'll watch from here to here. $28 $156. And you see how we're hanging out at the 786 here? But this 35,000, 28,000 X though. Maybe even month one, but we might do like some AMD over here. I like this as a level. $156.1. And we're gonna lock this so it doesn't go anywhere. The low created in April. Return to a monthly breaker block. Before continuing bullish. In April. Depression expansion. Prices been expanding. Higher. 1, 2, 3. The last 2 months have been housed in December, November. I think that's September, November, October. In October's candle body. Prices been expansion higher. Higher time frame anchor. The anchor is American Liberation Day. That's for sure. Will it? Control Z. Yeah, I can't do it like that. It's toward the price framework alignment. American exceptionalism is back. Boom. If you're only doing NASDAQ and top, pick something else to swing trade. NASDAQ is Bay. Oh yeah, I even got a little risk off, risk on. Get Dixie. Which hasn't really been telling us risk off, risk on, or anything really. Dollars in decline. This is acting like it's SMT with ES, but it's impossible. We on risk on CPT and ZF. Bonds ain't doing jack. We're at risk on right now. Dixie dropping. Bonds are consolidating. Metals and markets running. We're in the sale program. Boom. Bonds and stocks move together. Dixie yields move together. Boom, boom. Let me put the 10 while I'm here too. And the VIX. Ooh, it's 10-year. Here we go. me put the VIX on there. I need the CBO VIX. The real VIX. I need to fix without the late data. That'll help. I need to buy CBO. He's so cheap. How does they get on? Capital got a little bit of everything. They just so janky. Lower rates, boom, boom. Yeah. Yep, we already did that. And we're going to January. $13 weeks. Go back in. Go here. Current interval only. Current interval only. Current interval only. Current interval. Hold on. Now lock. Come on. Lock. Do it right, you ain't gotta do it again. Okay. $13 weeks. 13 weeks are here. All-time high. Oh yeah, because I had to switch feeds for data. We lock this. This is already wigged. Still going back above this super bullish because we wigged this down candles low. And lock. You can say this got respected like as an order block. I used to have, it was like a little tool I had, like a parallel channel. This used to be the cool thing back in the day. And current interval only. And lock this. Yeah, I'm bringing this back. Now it's clean. Because you can see how he came down into this weekly order block perspective, 50% of it. Not no real gaps or anything else I can mark on here. That's super significant. Mm, I'll say it's neutral, but we're bullish. No, it's still kind of neutrally. Narrative, narrative context. We getting over the government shutdown. With another one right around the corner. What are we seeing as far as market maker model? Mm, the offset here. We're finna do distribution above the highs is next. We already grabbed sell side. Correlated markets. The S&P. Let's see if I put USD on there. Wouldn't Rwanda pop up? I'm looking for Rwanda. Rwanda got the data for the data. Bam. Found you. Yeah, S&P's already at new all-time highs. I mean, I don't need the ES on this for S&T. I need SPX 500. Bam. Boom. And where's my... So, yes. And this was the SPX. Bam. Alright, we in the game. Just want to see the CFD stuff. I can do the futures whenever. But this is definitely not going to show it, but I should see it here. Okay. Real S&T. SPX already made new all-time highs. Just one market now. And my KPIs is already set. 6 to 8. It's not no new theory or model. Take it slow. Quarter one. Playing the long game. Define steady themes on daily profiles. And this gets into the weeks and the months. Okay, we ready for the quarter. All right, that's that on that. Y'all have a good day. triple check. No, we gotta do week. Felt like that shit was kind of slow. It's always more when it's the end of the month, new quarter. FOMC minutes and unemployment. Market watch. January, boom, boom. Options expire. Cool. You on track. It's really. Hold on, let me do it like this. Trying to time it. There we go. Nice clean screenshot. Gold prints, okay. Dow Jones gets a lift. New records, Santa Valley. Dollar push ease from 11-month high years. UJ is definitely gonna be interesting. Like with all that, the new. It's looking swing tradable. January, then it just crazy. I have to say that is interesting. No COT until January 28th. COT is back on schedule. They are releasing stuff, but it's old data. And if they re-shut down the government, we can be right back to no data. So that's always fun. It's So right now we had a 82% chance of no change for the 28th of January. That's when COT comes back. Chance. No rate cut. What are the earnings coming up for this week? So there is no earnings at all, just to be determined stuff. And the sentiment's probably bullish. A lot of cash on the side. Bearish went up and bullish went down. Lots of cash on the side. Big funds are waiting for January to reposition and tax loss harvest season as well. weeks of days. Go here. Here's the 9. 9 weeks of days. What stands out here? Just this gap that I had before I had to switch feeds. This gap and this new week opening Friday. Here we go. Like this. Current full below. And lock this. This should be locked already. It is. Okay. Mm-hmm. Now weeks of days here. Any notes? Last week was holiday week. Could run both sides. There's liquidity for the next month cycle. Point interaction. This is our last real anchor point because this created a swing that took out this low. You could say this is a swing down, but it didn't take any structure. We took this low and we closed back above it here. So it'd be like an invalidation point, and I want to see us get back above here. But the anchor, in my perspective, is here because this broke a swing on the way Control Z. I do got daily anchor here. Bottom right. Lock this. I want to see a rerun through this high. Close above this. Lock this. It's not retested. Daily anchor. And we closed back above previous lows. Confirming bullishness. Story price alignment. Valentine's Day. Bread and butter. Thinking about you, Jay, for the swings. Skill focused. Building. We taking Q1 as the launch pad for the year. Journaling intent. The daily profiles. And liquidity. Case study hunt plan. It's really study by Jackson. That's all I ever study. Bread and butter. Building for the year. Go slow in Q1. Speed up in Q2. With the news this week, it's really gonna be Thursday. No, Wednesday. Thursday's a holiday. Employment on Thursday. Alright. Week 1's gonna be 12, 28, 25. Do it like this. 2, 1. What is Friday? The 2nd. Okay. Alright, we're good to go now. Alright, y'all have a good day. Peace.